ready to go.
Boy, welcome back, everyone. Episode 99. This is going to be fantastic. The day before, the episode before 100. We have a little, today is April 1st as of the recording, so AKA April Fool's
Do you have
Day.
an April Fool's for
We
us?
do. And then on top of that, I started playing a little bit of pranks with Lisa ready to begin the day. Normally we do a little bit of prep work, kind of notes the day before, so...
But it was not a fool. You really went through with it. It was really no prep time.
So Lisa didn't get her normal prep time because I didn't put out the the notes early enough for Lisa to do her prep work. So, but I think this will still be a fun, exciting show. Speaking of April Fools, is it something in Austria?
Oh yeah, it's big in offices as well and stuff. So
right.
we have some good ideas.
Maybe this will get Lisa over the hump of like having to do her notes ahead of time, just off the cuff.
Yeah,
to be more spontaneous, you think?
We'll see what kind of answers.
I tried to tell Keith just to not even do the notes. Somehow he came up with some notes for this morning, but
I came up with them. But it would have been nice if they were last night.
That statement will have consequences for you, Tyler.
All right. Well, we'll jump into April Fools. We'll kind of do 2 truths and a lie about April Fool's Day. Let's start there. The BBC in 1957 spaghetti harvest hoax was so convincing that the viewers called in asking how to grow their own spaghetti on trees. Sounds kind of fun, doesn't it?
Yeah.
B, April Fool's Day is an official public holiday in France where it originated. C, in Scotland, April Fool's Day traditionally lasts 2 days. So I'm going with Tyler. I think he's got a big smirk on his face, and since he's Mr. No Prep guy, we'll see if he's got any idea about April Fools.
I mean, I have no idea about any of these, so this is just a shot in the dark. So I guess I'll go with the oh boy. I don't know if it originated in France, so I'm gonna go with B.
All right.
I can see A. Yeah, I can see that because there's more. Like every year, there is companies also kind of advertising something weird and stuff, and they're usually very convincing.
Mm-hmm.
So I can see that was convincing enough for some people. Weird, but you never know, right? In Scotland, April Fool's Day traditionally lasts 2 days. Well, I don't know, but I go with B as well. I don't think it originated in France, and I don't think it's a public holiday there. So B is
all right. You both nailed it. But
nice.
For good job, you two. I do like that first one. Isn't that kind of cool? The spaghetti growing on a tree. Yeah, so it's like, and Google and a few other companies have had them in the past that were pretty convincing. But I'm like, could you imagine people just calling what spaghetti on a tree?
Hold on.
How can I grow?
For you too? All right, finally you got the clap going. But yeah, no one really knows where it originated, but France kind of is supposedly where it originated.
Okay.
But it's not a national holiday.
And in Scotland, it really lasts 2 days.
2 days. I guess we got to go. I mean, Austria, you said it was big. I guess it sounds like it's really big in Scotland. So
interesting. I mean, it's big in Austria, like where like just the little jokes, and in the office with coworkers, some go above and beyond with some.
Yeah, kind of
some
like not
pranks.
giving you company notes before podcast, something like that.
Last year, didn't we put a fake spider under your mouse and keyboard?
that freaked me out. Yeah, then
are you afraid of?
No, because it was under the keyboard.
Beware,
and
Lisa,
they changed
beware.
and they changed the keyboard, so I had to lift it or anything, and there was like a big plastic spider underneath. And I apparently had the right reaction they were waiting for because I freaked out and everyone was laughing, and I was like, wow, great, guys.
Oh, that's good stuff. All right, April Fool's Day. Let's get the show under the road here. Since April Fools, we just marked the first quarter.
Mm-hmm.
We'll talk about a little bit what happened in the first quarter and Any surprises and kind of, I'll give you a little bit of stats. So S&P, when referring to the market, it actually finished down 4.63%. That was a bit of a surprise for me. Oil above $100, WTI, and the 10-year yield is about 4.32. So those are kind of some metrics that we always look at, talk about as investors. We're certainly concerned with all three of them. So let's get you guys' thoughts on, Tyler, I'll start with you, kind of Q1, and you can touch on some of those items or kind of go wherever you like, and kind of maybe what surprised you and kind of maybe what didn't.
Yeah, I mean, it wasn't a great quarter. But I think from the highs, we're down 7%-ish. And I mean, that's a normal year, right? So like what is the average? I think the average pullback intra-year is like 10% or 11%. So it's not like we just have this recency bias of,
for sure,
of feeling like the market always goes up. I mean, even last year, I feel like we've completely forgotten about April 2nd, and then it was the 5th, 6th.
April 2nd, Liberation Day.
Was it not April 9th?
No, 2nd.
No, it was April 2nd was the day that he announced the tariffs, and then
and April 9th it was
and then April 8th or 9th was the day that the taco trade. So I mean, it's not like the calls that I've been getting, it feels like it's a disaster out there.
For sure.
When in reality, it's not that bad. Like it's a normal.
But do you think
not even a correction? Correction is minus 10%.
Yeah, we're not even.
So it's a normal. It's a normal pullback, right? So like we see these on a normal basis. It's just we have this idea of like the market just like continually ticks higher when it doesn't. And I guarantee you by.
Well,
I shouldn't say guarantee. I'm not going to say
don't guarantee anything,
Tyler.
But my feeling of everything that's going on right now, it's going to be like 2025. It's going to be like 2023 with the banking stuff, or 2024 with DeepSeek. Like we're not even going to remember it happened when we get to July or August, and we're going to be like, oh yeah, the market pulled back 7%. Forgot about that. So I don't think it's a disaster. I think oil being above $100 is probably a bigger concern.
But do you think people are concerned not because their market pulled back 7%, but because energy and what we all hear with the war, and that we probably maybe don't get a resolvement all that early, and energy prices, oil prices will be elevated for longer, that they expect more to come here, so that they're concerned that not what we saw so far, but what can still, be happening with the drawdown because of that.
I mean, yes and no. Like travel for consumers is going to be more expensive. Products for consumers is going to be like the amount of, I know we talked a couple of times about how much oil goes into products, but the actual cost for oil in your, I'll just use Tide detergent, right? Like the plastic bottle that you're buying, the percentage of oil that goes into it is somewhat minimal, I would say. So yes, your products are going to get more expensive, which leads to higher inflation because the company's going to raise prices by 5 cents or 10 cents or 20 cents, depending on how much oil actually goes into it. But I'm actually a little bit on the other side of it, that I don't think $100 barrels are going to be that disastrous for the economy, to be honest with you. Now, if you go to 150, I think that starts creating a lot more issues. But we've seen $100 barrel oil in the past, 2009-ish, and then 2 years ago. So I don't think it's going to
a few years ago now.
Like I don't think it's going to be that disastrous. If it stays above 100 and gradually creeps higher, yes, but I don't think this conflict lasts that long. I know Trump came out and said, he's okay making some agreement with Iran despite the Strait of Hormuz opening or not opening, but I just don't think it. I think at some point this all gets resolved in the next few weeks. Each side calls it a win, and then we move on. Yeah. Like Iran can't compete. Compete's probably not the right word, but can't compete with the U.S. Defense Department, and everybody knows it. It's just the way that they're set up is to just continue this conflict, regardless if Tehran is operational or not. Keith and I talked about that the other day in the different, not fractions, but the different ways the government is set up in different regions. So I'm not all that concerned right now. I think yesterday was a good proof of that, as the market starts to realize like it's probably not as big of a deal, and you start to see this snapback. The other interesting thing is, sorry, I'm going on a tangent here, but Tom Lee with Fundstrat. So he came out with a research piece, was that late last year? But they did an analysis on the velocity of the declines in the market versus the velocity of the bounce backs, and it's somewhat
on the downside.
No, it's almost identical.
Oh,
so like a lot of people think about 2008 because it was such not necessarily a slow decline, but like it took a year,
it was long
to reach the bottom, and then it was a couple years to go back to the top. But he said, the report generally speaking was the velocity of the decline matches the velocity of the upside. So when you have these sharp declines like April 2nd last year, you see the sharp decline, but then you see the sharp snapback, or same thing with 2020, you see the sharp decline, sharp snapback. It might not be like symmetrical in a V shape, but generally speaking, you see a similar velocity on the downside and upside.
Lisa, I'll answer your question about Tyler said whether it's the market being down 7% or if it's the headlines. I think it's a combination. I do think it's probably more the headlines. If I had to, not just 50-50, I would lean it's probably, people are seeing maybe their statements a little bit, but it's more the constant headline. And there's certainly, both sides necessarily don't like conflict and war. And, there's certainly articles I was reading the other day. It's just like, just had every possible negative thing you could tell was just, they don't like the policy. They don't like the president. They just certainly putting all these negatives. Again, there's certain valid points to them, but I think that just that nonstop media kind of, just kind of drilling on what's going on, what policies, and there's definitely been plenty to complain about, but
there's no shortage of headlines at the moment.
So I think that's part of it. I think there's a lot of headlines out there. It makes people more uncomfortable. But that being said, what do? We focus on company fundamentals. We talk about it all the time. To Tyler's point, I'm a little more worried if oil would stay at $100 than Tyler is. I mean, I don't think it kind of completely changes the picture from positive to negative, but it certainly would
get some speed bumps.
I mean, but would you say like if oil stays at 100, let's just say oil stays at 100.
Yep.
Do you think we've already seen the pullback in the market to account for oil going from $65 to $100 a barrel?
Oh, that's a good. I would say earnings. S&P forecast earnings this year are 16%. That 16% is no longer 16%. So that's maybe 10, 12. If oil's at 100, maybe 10. So is the market at 10% where we're at? That's a good question. I think the market's accounted for a lot of it. So your point there, if that's what you're going down.
So that's where my frame is right now of like, we've already seen the correction.
But then I think if you think we're going to stay at 100, then your multiples maybe you need to contract a little bit more. I think that's where the difference would be. So it's not only you're going to get that 16% growth going down to 10, you're going to get a multiple compression, which we've done that right now with the market correction, right? It hasn't been earnings, it's been multiple correction. I think we're at about 20.
But like we talk about the broadening out trade. So like a lot of the companies outside of the Mag 7, even the Mag 7 is getting cheap. Like Nvidia is trading at less than the market multiple right now. But like take out the 493, like those valuations are already sitting at that 16 to 17 times. So like there's plenty of opportunity.
I have a little segment here that I do think.
Sorry, I'm jumping ahead.
No, that's fine.
I didn't read the notes.
No, Lisa can touch on. I kind of pointed out. I think asset class. Let's jump into performance here. So energy, which we talked about, obviously it's been up 30-some% this year as a sector. Fantastic. S&P almost down, say 5-ish%, a little less than 5 on a year to date as of first quarter. Then we had materials doing well, utilities, staples, kind of the stuff you would think would do well in kind of this bumpy environment. certainly has held true. And then on the flip side, financials, right? If you're worried about the economy slowing down, you got the private credit stuff. So that's
That's
a
been a
little
bit
bit.
surprising to me, though.
I think it's a private credit stuff in there.
Yeah.
You know, this whole
Yeah, true.
investment in software. So I
Your
think they're just
Blackstones,
they're just
Apollos.
dragging all
Yeah.
banks in there, not even just the Apollos and KKRs,
Even the
and
large,
Blackstone. So
City and
discretionary is down. I think that's a reflection of oil. So like
Mhm.
to Tyler's point, I think you kind of already pricing in higher oil prices for how long. And then the one that's, technology almost down 10%. That's right. I think, going into last year, you guys know that I was kind of less positive on tech relative to a benchmark, right? I still like tech, still big growth guy, still want a big allocation of portfolio, but I own less than what my competitive universe has. Now I'm at the point at these levels, that's my buy basket. So that's, that's where I am looking, to your point of stuff like Meta's at 15, 17 times. Reminds you of a couple of years ago, Amazon's trading at 20 times, all-time low on PE. You got Google trading back into the teens, where the market, the S&P is at 20 times for a lot less growth. I think this AI, we're in the early innings, and I still think they benefit. And right now it's shoot first on any AI stories and go from there. Lisa, you got some stuff on valuations and some interesting stat you told me this morning about.
Yeah, it's interesting. And we just mentioned it that NVIDIA trades cheaper on a next 12-month P ratio than Chevron, which is interesting, right? I mean, it's like just mind-boggling to think about that. And also cheaper than the overall market a little bit. Yeah, it's crazy. I mean, what outperformed so far this year looks very different to last year and what we were used to for quite some time, like 2 or 3 years. And I think since the war broke out, like late February, only energy is the only sector out of 11 that is positive.
Is that what it is?
That's the only one.
Interesting.
The other one are all down. But I think, like to your point, Keith, I mean, now that we are seeing that picture, it creates opportunities in these beaten down names, opportunities in specifically in financials and tech that I think could be interesting to look at. Now that history suggests that we can be near the bottom when we look at geopolitical tensions, what the market usually does and how it reacts, and also what we thought, probably the most priced in probably at this point. So I think it creates good opportunities at the moment.
So we'll kind of put Lisa on the spot again, since she didn't get to do her notes. So that being said, where the market is, and kind of what Tyler talked about, what I talked about, where do you think the next, everybody kind of likes to mark a year kind of performance, kind of where do you think we go from here, and then kind of how does that, and if you have any kind of, again, no one really knows what's going to happen on the geopolitical side of things, how do you think that Iran situation, is it sooner rather than later, or is it continue to drag out?
So I think Lori Calvasina from RBC, she was on TV the other day, and she said, okay, the market now takes it day by day. I think that was a good thing to say, or a good way to look at it, because what we were seeing yesterday, Taco Tuesday, people calling it, right? I mean, markets were up the strongest on a daily performance since last.
For listeners that haven't listened before, haven't heard the
term, taco, what it means.
Yeah, at least you want to
Trump
explain.
always chickens out, which means, okay, we hear some negative news and right out the gate come out swinging, but then chicken out and backs up a little bit, and the market kind of trying to anticipate that, or at least take that scenario as a base case. At the it started specifically since last year, the tariff tantrums. This is where it really got its name from. But anyways, she said the market take it day by day, and we saw that yesterday. It was the strongest daily performance of the S&P since last year in May of 2025.
Well, the S&P was up like almost 3%, 2.9 or something.
Yeah, Nasdaq even more. So I think we see a little bit more, ups and downs on a daily basis, depending on how peace talks are going. And I think market is now pricing in a little bit more probability that this is actually happening. Before that, it was, okay, Trump said peace talks are happening, Iran denied. No one knew, okay, what's actually going on, who is negotiating or not, or whatever is happening. So I think by now it's a little bit more going into the direction, okay, it's happening, and they're talking to each other or trying to resolve something. But again, I think there's still volatility ahead on a daily basis. But I think we're moving towards a resolvement rather than a further escalation where everyone goes back to just bombing each other and not talking to each other.
So from these levels, you think we, for the rest of the year, up, down, flat?
I think for the rest of the year, we're up.
Okay.
Yeah.
Tyler, you kind of touched on some good points earlier. Where do you think we kind of shake out here in the next?
I mean, I would say that we probably finished a little bit higher for the year. I don't think we're going to get the double-digit growth, but I don't. If yields stay, if Treasury yields stay kind of where they're at now, and we don't have, I still think there is more risk to the upside potentially
On yields?
on yields. But if yields stay around the 4.25 to 4.5 on the 10-year Treasury, I think it allows the market to expand and finish the year higher than we are from the start of the year. But again, there's a lot of different factors that are at play. I think you have a note here on the US dollar. I think that's a big one for especially the mega cap companies, because we saw a couple of years ago, dollar strengthens. It tends to hurt those companies because they are global companies. And for whatever reason, when the dollar's declining, analysts tend to in their estimates just write it off as a one-time thing. But if the dollar's going up, they tend to include it in everything to decrease their earnings growth for whatever reason. So I think that could be a potential headwind if yields rise, US dollar continues to rise for the mega cap companies. But generally speaking, I would say I'm fairly cautiously optimistic about the market.
I figured from your early conversation, you said $100 oil is not a problem, and I figured you'd be a little more bullish.
And then he started to guarantee us something.
Yeah, and then we had
Pull back on the guarantee.
we had to put the ixnay on the guarantee. But
no, I think look, the economy is a very separate thing from the market.
Yes.
Right. So like you can look at all the macro data that you can, but in terms of macroeconomic data, it's one for one, right? Like this consumer is the same equivalent as this consumer. Whereas when it comes to the market, this consumer is not equivalent to this consumer. And so I think if we can maintain, I know there's the AI concern of taking away white collar jobs. I think they can reinvent themselves. I also think there's jobs that we're not even thinking about on the other side of it, that those white collar jobs can become other white collar jobs. But you have to separate the two things from meaning the economy versus the market, because the market cares more about the high end consumer versus the economy is a one for one on every consumer. And so I think as long as that high end consumer stays strong, which I think they will, despite the AI and the concerns and everything like that, I think the market will finish higher.
Nice. No, I'm still relatively more positive than that. I mean, you brought up a lot of good things. When you said earlier that market tends to forget stuff, no one's even talking about the Supreme Court tariffs, which was
is interesting because
like
that was
2
a
months
big
ago,
thing
not
that
even?
everyone waited for.
It's just so that's why
we heard him strike it down and we're like, all right,
yeah,
what's happening now?
And I think that's probably what ultimately this Iran thing, like you kind of mentioned earlier, I think at some point in time the market's doing its thing. I think market's resilient.
I literally think August we forget about it.
Yeah, I mean, if there's signs that we're getting very close within weeks of kind of whatever wrapping it up means, and then markets will move on to the next concern. And the one thing that would make me a little less cautious or optimistic would be price of oil. I think that, so we differ a little bit there on. Yeah. I think if it stays at 100, then my kind of positivity has to be dialed back.
How many years have we? I'd have to find the chart, but like, what was the price of oil back in the 80s?
Yeah, then you
right, like there hasn't been.
No, it hasn't kept up with inflation.
It hasn't been the inflation that, and I know we've fracking in U.S. even though we export most of.
But the weight of oil and energy within inflation,
what I'm saying is
down,
like
it's about 6% compared to in the 80s it was much higher.
No, I understand that, but what I'm saying is like the actual price of a barrel of oil back in the 80s, like if we were sitting at $60 today, relative to like prices of everything else, the barrel of oil has stayed pretty.
Oh, for sure.
Like we just haven't had that, and I think we're probably in that new realm with geopolitical risks and everything
that we could be higher.
that we're probably going to be in, like maybe not $100 a barrel as being like the main like price, but I do think at some point we're not going to be sitting at $60 a barrel anymore. Like I think we're going to be sitting at that 80-ish range.
I'm taking the under for the longer term.
You think so?
I just think because our supply, and then there'll be other alternatives along the way. And then, I mean, the flip side of that, the pressure from AI and energy consumption is kind of probably pushing that up, but we'll see where that comes from. So,
but also like the Strait of Hormuz, like the big thing is like all of that, the Strait of Hormuz, all the oil that passes through the U.S. gets very little of it. 4%.
Yeah, so that's why that's why
most of it goes to Asia, which is where we get all of our
other
stuff from.
So there's a little bit of that, right?
Which
and all of a sudden you can't get your stuff for your semiconductors, whatever. So it is true that we don't get very much oil there, but it does kind of
it impacts the global trade.
Other stuff. All right, let's changing gears here quickly before talk about a little volatility. We've seen a lot of that, Lisa. I'll let you just kind of answer this question. Volatility is perceived as bad and negative, but there's some positive, it creates opportunities for buying, but also some other stuff that we're looking at. You want to talk about that?
I mean, volatility is constantly now elevated since the Iran conflict broke out, which again, volatility is often just seen as something negative. But at the end of the day, it's the price of admission, right, for an asset class, equities, that gives us higher returns over the long run rather than bonds, for example. Volatility is what we have to endure to being able to get these returns, right? I mean, and one does not go without the other. It's always a price at risk reward thing at the end of the day. And I think volatility is not necessarily something negative in and itself, even though it kind of is perceived as that. Obviously, I mean, when we look at our portfolios and we see some higher volatility, obviously that's not good to look at, right? But when you are diversified, you're probably having less impact from that to begin with. And also it creates opportunities. Like for example, like in tech, okay, now we kind of see at other sectors that we might get some
opportunity.
Good picks there. And also, for example, for our structured notes is a big part of our business, and our advisors and clients like it. And again, it's part of diversification within a portfolio, and we get better return, better caps, better income.
You just went out with terms the other day with the volatility is pretty high. I think yesterday the volatility really dropped, the one day. So we went out the day before, and they priced off of interest rates and volatility, and terms were pretty impressive, weren't they?
Yep, they are. Like much higher caps on the growth side, much higher yields on the income side. So this is really where for that part it's good. We lock that in so that client gets that for whatever long the terms are, which is fantastic. So we get some diversification from these products, plus added benefit from volatility here, which I think is great. So we can phrase this in a positive way as well.
For sure, right? Aren't we getting over 9% for some coupons for like a 40% barrier on some of the indices? That's a numbers that we haven't seen, for a while, which is certainly potentially good for advisors and clients, and
if they're planning for income, that is.
Look at Tyler. Nice job, Lisa. All right, so that's on volatility. Well, let's we'll keep this show nice and tight since Lisa's we don't want to April Fool's her day out, but let's talk about April Fools. We got Easter around the corner. Let's start with Tyler on this one. Tyler, is Easter a big deal, a non-event? You have little kids at home, so I have fond memories of
the boys love Easter. They just love the Easter egg hunt. And so I was on ChatGPT last night.
There we go.
Actually, Claude, having it come up with different like clue cards for like the Easter egg hunt.
You, Dad of the Year.
So that was fun. So I was doing that last night. But yeah, I mean it's like you got to go to the bathtub, to the dryer, to the sandbox, to the like all sorts of different stuff, and each clue tells them like the next step to go. Now they
Is there some prices on the way, or is it just leading up to the big one?
Yeah, there'll be like each
Mhm.
clue will have something, and
Mhm.
then it'll lead to like
The big price.
yeah.
Do they have?
And
Is it
then-
all candy, or do you throw a little cash down? Or what are we talking about? A
A
little.
little cash.
I'll usually put like
Couple of stocks.
Yeah,
plus
yeah.
NVIDIA shares.
some of the eggs will have like some quarters. I mean, that was like what my parents
Yeah,
did growing
same
up
thing.
was like quarters or
Yep.
$1 or
Yep.
whatever. So there'll be some of that, and then I'll take them to Menards. Probably.
Oh.
Well, I don't know if Menards will be open that
Menards.
day.
They have to be proper Minnesotans.
Like we'll go
For those of you that are not in Minnesota or the Midwest, that's like a Home Depot or Lowe's, but it's got a
Yeah.
lot more other stuff.
Yeah, we'll go to Menards and they'll pick out like a $5 truck or something, and then for Hudson's birthday, I built him a massive ass sandbox. So I'm sure there'll be trucks that'll be going into the sandbox that will.
Nice job.
So
Lisa, how about you? What are Easter? I know you're a big decorator and kind of.
Yeah.
Is it big deal? Not a deal? Or?
you got a big bunny outside on your
Yeah.
porch.
Does the Mr. D come home
blow
in
up bunny.
in the rabbit
I
costume for
don't
you?
do a whole lot for Easter. So not too long ago, I put down my my Christmas tree.
Oh, it is.
winter
You
decorate.
beat Easter?
It's down. It's down.
You should give a clap for that one time.
I was like, with the snow melting now, it's like, okay, it's time to tore it down. But I'm not doing a whole lot for spring. I mean, some refreshments around the
Oh.
But I have like Easter eggs that you decorate usually.
Oh, you do?
Yeah.
Lisa goes on an Easter egg hunt.
I don't know if that's like a big thing here, but in Austria you do like with the little, what is that called? The little sticks with the fluffy things on it.
A Q-tip?
No, it's like a tree,
Fluffy.
like a twig for spring that you can buy.
A palm.
Yeah, like I don't know what's called.
Well,
Stay tuned for next week's episode. We solve
palm is more
Lisa's.
leaves, but
No,
okay. like a palm is like when
No, it's a twig.
Like Greek,
You know,
Greeks were like
No, it grows out. It's
Okay.
a twig and it has like little white fluffy
Jeez.
pots on it.
Okay.
I don't know. Everyone probably knows.
Cattail?
A cattail?
Oh boy, now we're going down a
Okay.
rabbit
Okay,
hole.
well, whatever.
Either way.
So we decorate we usually with that, but we will lift the mystery next week what I actually meant.
Nice. Stay tuned, everyone.
Yeah,
Jeez.
right. But there's not much going on, so it's like a little
Yeah.
spring refresh.
What are you doing? You got kids coming home?
Yeah, kids coming home, which is fantastic. College, they get a couple days off, and they're getting closer to the. It's amazing that once you get to Easter, their semester's almost over. So, it's great having the kids at the house. But so mine are bigger than I do have fond memories of the Easter egg hunt. Same.
Do you still do the Easter egg hunts?
Well, it's
for 'em?
funny. For a couple of years, we kind of, now that they were old, again, they're college age kids. A couple of years, we kind of just, they come home, we do our Easter dinners and family events, and great. And for a couple of years, we didn't do anything. And then a couple more kind of like, well, why don't you guys hide stuff? So now my wife did pick up some Easter egg baskets with some
Nice.
candies and little goodies in there that she'll put in the house, but I don't think they're going to hide them too hard. Again, these are college age kids, but they still enjoy it. The other fond memory I had when we were at the family gets together on my side, and we if the weather's permissible, we would have outdoor kickball.
What is?
Oh.
Are you also doing like the brunch? Because in Austria you do like a traditional like family brunch for Easter.
Yeah, we usually do kind of
Is it
brunch
that or more
or
dinner
early
or-
lunch. No,
okay,
we usually ours
okay.
around. Again, it depends on families and
Yeah.
two side things, and if you got to go here and there. So we use ours on my side, family, my mom and my brothers and stuff. It's always been on a Saturday
Mhm.
before Easter, and then my wife's always do on Easter. But on our Saturday, we'd always, if the weather was nice, we would play kickball from small kids all the way to large adults, and fond
That's
memories
fun.
of
Mhm.
throwing the ball hard at the little kids and just decleaning
Tagging
them. So good stuff. So no, it's a good time of the year. So all right, everyone, we'll stay tuned for Lisa's kind of whatever she figured out her stick and leaf thing is for
Yeah,
next
I
week.
will. Yeah.
All right,
Language barrier.
all right, everybody, like and subscribe. See you next week.